Hello everyone, welcome back to our weekly webinar series. My name is Faiza Hashmi, I'm the tax director here at Press Cooper. Today we will be discussing a new topic, the revised corporate tax rules for free zone businesses. Now can you change the slide? So every week we are discussing various topics since the introduction of the corporate tax. We have been discussing various topics and covering key areas of corporate tax. So if you have missed on any of our topics, they're available on on our YouTube channel. So you can go there and see the webinars. If there are any questions, you can always email us. So apart from the key areas, we have been also discussing the cabinet decisions which have come out, the new guides which have come out from FTA, trying to explain in more detail about the corporate tax provisions. And just like that, today our topic is going to be for free zone. Now, free zone has been a very interesting topic since the law has come out, because when the law came out, there was not that much clarity, and that is the one area where people were most interested to know how the corporate tax is going to impact the companies which are in the free zone. After the law came out, then we saw that some cabinet decision had come out to explain more about the free zone companies. And now last week we have seen that a new cabinet decision has come out and has repealed the old cabinet decision. So that is what our topic for today is. So I will be joined by Mahar Afzal, who is the managing director of Press Cooper, and together we will be taking you through some of the provision of the law, some of what had come out in the cabinet decision, and then what is happening in the revised cabinet decision, or what new changes have been made. So if you can go from the start, Mark. So when the law had come out, so the information that we had about free zones at that time was that there would be 0% tax on qualifying income. But qualifying income at that time had not been defined, that what would be a qualifying income. And that we knew that whatever was not part of the qualifying income, that would be considered as non-qualifying income.
Just wait, Faiza, just wait. I think we have missed one thing. Okay, you can continue, it's fine.
Yeah, you want to take from the start or you want to continue?
You can take it further, it's fine.
Okay. So as we were discussing that when the law came out, the only thing that we knew was that whoever would be a qualifying free zone person would benefit from a 0% tax rate, but only on qualifying income. What was qualifying income was not defined. And then we knew that whatever was not part of the qualifying income would be subject to tax at 9%. The other thing which was made clear in the law was that CT would be applicable on free zone persons, and they would have to comply with all the provisions of the CT law, like registration. Can you change the slide? So another thing which was explained in the law at that time was what is a free zone. So a free zone is a designated and defined geographical area within the state that is specified in a decision issued by the cabinet at suggestion of minister. So this was the definition that had come out, but this cabinet decision had not come out explaining which free zones are part of the free zone. But at the moment, we can consider that all the free zones are part of corporate tax free zones till this cabinet decision comes out. So free zone person had also been defined in the law, and it said that a juridical person which is incorporated, established, or otherwise registered in a free zone, and it had included the branch of a non-resident person which is also registered in the free zone. So that was part of the definition. And from this definition, it was clear that natural persons who are conducting business or judicial person who are not established in the free zone would not qualify as a free zone person. And free zone person can only be the judicial person, like limited liability companies, partnership where the liability is limited, funds which are structured as legal entity or public shareholder company, public joint stock companies, branches of a non-resident judicial person as has been defined in the definition itself. So these are the people who can be a part of a free zone person. So qualifying free zone person had also been defined in the law at that time, and then the information we had was that that somebody who maintains an adequate substance in the free zone what is adequate substance had not been defined. That derives qualifying income, that had been also given in the law, but again it was not given. What is qualifying income was not defined in the law at that time. Another condition was that it complies with the transfer pricing rules and regulations, and that it will not be electing itself to be taxed on the corporate tax rate of 9%. So after that, we saw that after a bit of pause, that cabinet decision started coming out, and the much awaited cabinet decision and minister's decision for free zone persons had come out at that time. And in those cabinet decisions, we saw that two more conditions had come out for people to be considered as a qualifying free zone person. So one was that they had introduced a de minimis requirement, which we will discuss later. So that non-qualifying revenue should not exceed the de minimis requirement. So that was one of the conditions. And the second was that the qualifying person would have to maintain audited financial statements. So generally there is a limit, how much revenue earning, and then by that you have to maintain audited or non-audited financial statement. But for free zone person, it doesn't matter; they have to have audited financial statement. And if there's any failure to meet any of these conditions in any tax period, then you would be disqualified from being a qualifying free zone person. And not only for that tax period, but also for the subsequent 4 tax periods. So there's a big penalty that for the 5 years you cannot be again considered as a qualifying free zone person if you fail to meet any of these conditions. So just to sum it up, the 4 conditions which we saw in the law, that it should maintain adequate substance in the UAE, that must be deriving qualifying income, should be complying with the transfer pricing rules and regulations, should not elect to be subject to CT corporate tax, and should meet the de minimis criteria, should have audited financial statements. So these were the 6 requirements that a qualifying free zone person had to meet. So then the another thing which the cabinet decision clarified was what is adequate substance. The law had said that they have to maintain adequate substance, but they had not defined what it was. This decision had then further given clarity on that. So what they had said is that the core income generating activities of the company should be from the free zone, and they should have the adequate assets in the free zone. They should have adequate number of qualified employees in the free zone, and there should be an adequate number of operating activities being done there, and adequate expenses being done in the free zone. So there was one provision where they had allowed that the activities can be outsourced to another related party in a free zone or a third party in a free zone, but then the condition was there that the qualifying free zone person should be supervising that outsourced activity themselves. So the de minimis requirement, which we had discussed earlier, that was one of the conditions, that the qualifying free zone person cannot burst this de minimis limit. So this de minimis requirement had come just to to ensure that the qualifying free zone persons are driving bulk of their income from the qualifying activities, and they are allowing that if there are certain income generating activities which do not fall under qualifying activities for them, they are allowed to have a certain percentage of those income generated from those, and still be able to maintain
Correct.
their status. So this de minimis threshold which was given was 5% of the total revenue, or 5 million, that was given. So now if you see in this example here also, so there, so if you see in the examples, that you see in the example 2, the total revenue is 80 million, and 5% of the total revenue, if it's 4 million, then threshold, because it's 5 million or 5%, so whichever is higher, so sorry, whichever is lower, so NQI would not be more than, the non-qualifying income for that company should not be more than 4 million. Can you change the slide? Okay. So then there were certain more, information that had come for de minimis requirement on how to calculate it. So if you see, the de minimis percentage is the non-qualifying income, which is the nominator, and then the denominator, which is the total income. The non-qualifying income is income from excluded activities, which we will be discussing in detail later. The non-qualifying activities where transactions are with non-free zone person, and for the total income is all the revenue, but only the exclusions for that would be the revenue which we are earning from the permanent establishments, domestic and foreign both, and from immovable property, unless that income is from immovable property that is classified as qualifying income. Yes, Mark, can you change the slide? So we can see that other than immovable property, the qualifying income can be for a person who's based in Java from all free zone income would be considered as qualifying income. And UAE domestic PE and non-free zone person, they can do transactions with that. And the foreign PE are considered as the rest of the world. So domestic PE is considered as those that are inside UAE mainland. Can you change the slide? So for movable property, there was a certain different conditions that person is in the qualifying is the qualifying free zone person. The property is in the free zone, and transaction has been made with other free zone person. The property is exclusively being used for the business purposes. Can you change the slide? And so this is a snapshot of the law and all the ministerial decision, the cabinet decision that had come out, and it is just giving you a snapshot of that if the income is derived from a free zone person for a qualifying free zone person, or income is derived out of free zone, then what is the treatment? Yeah. So income that has been derived from the free zone could be income derived from other free zone person, or it could be income derived from immovable property. So if it's income derived from other free zone person who are registered in the free zone, then and if it's not related to excluded activity, then it would be considered as qualifying income. If it is income derived from immovable property in the free zone, then if it's commercial property and it is used exclusively for business, it will be non-qualifying income if it is a transaction with non-free zone person. Qualifying income if the transaction is with a free zone person. Non-commercial property, the non-business or residential use, that is will be considered as non-qualifying income, but it will be excluded for de minimis requirement. Income related to PE. So if income is being derived out of free zone, it can be income related to the permanent establishment. Like we discussed, domestic PEs are the one who are in the mainland companies, or the foreign PE is the one which is out of UAE. And for that, they are both non-qualifying income. For income derived from non-free zone person, for that one income, if it is derived from qualifying activity which are not part of the excluded activity, then it is a qualifying income. And if it is part, and then it's a non-qualifying income if it is qualified activities but excluded activities if it is done from non-qualifying activities. The old minister decision and cabinet decision that had come out, which explained what are the excluded activities, what are the qualifying activities. So at that time they had told us that excluded activities, the one if you perform, then it turns into a non-qualifying income. They were through if they were transactions with natural person, banking activities, insurance activities, finance and leasing activities, immovable property, if it is done with that intellectual property assets. Market changes, or any other incidental activities. And it also had given us a list of what is a qualifying activity. So if you are doing these activities with non-free zone people, you still will be earning qualifying income. That was given in the cabinet decision as manufacturing of goods or material, or processing of goods or material, holding of shares in security, ownership, management, operation of ship reinsurance, fund management services, wealth and investment management services, headquarters services to related parties, treasury and financing services to related parties, distribution of goods and material, logistics services, financing services. So all these were already given in the cabinet decision which had come out. So we had this much information from the old cabinet decision and also the law. And now Mahar is going to take you through the new cabinet decision, what are the changes that have come up and what has been repealed. So Mahar, over to you.
Hello, Faiza. Thank you very much. And thank you very much, everyone, for joining us once again. And as Ms. Faiza, she has already discussed that we are going to discuss what are the revised rule for the free zone persons. For the revised rule for the free zone person, if I'm going through the previous rules at the high level, we can say there are four major changes. The four major changes are there no definition in the, there's no change in the definition as such. There's no change in the definition. There are no change in qualifying free zone person. Conditions are same. These are the 6 conditions for the qualifying free zone person. For the free zone person to be considered as a qualifying free zone person. And adequate substance, there is a change because in the adequate substance, they are qualifying the person who is dealing with the qualifying intellectual property. that person can outsource the SIGA out of the free zone as well. There's a one change here. So if the qualifying free zone person is the owner or using, exploiting the qualifying intellectual property, as per the initial cabinet decision, core income generating activities can only be outsourced within the free zone. Now they have given some sort of relaxation. They said the qualifying free zone person can outsource SIGA related to the qualifying intellectual property out of the free zone. Might be within the UAE, might be out of the UAE, but supervision is compulsory as usual. So one change is here. Non-qualifying income, they said the person who is earning any income for the non-qualifying intellectual property, or the person who is earning income, qualifying income from the qualified intellectual property, but which is not qualifying for the qualifying income, that will be considered non-qualifying income. That will be considered for the de minimis criteria. But the qualifying income from the qualifying intellectual property, it will not be considered for the de minimis criteria. So this is the second condition. Second change. And third change, in the qualifying income, they have included qualifying intellectual property also. So income from the qualifying intellectual property will be considered as a qualifying income, but there is some specific formula based upon that formula. We need to calculate the income from the qualifying intellectual property, and that qualifying intellectual property will be considered qualifying income. In this, they have removed this intellectual property. They said intellectual property assets are not excluded activities, but they have split this intellectual property assets into the qualifying intellectual property assets, non-qualifying intellectual property assets. Out of this qualifying intellectual property assets, some income, it will be considered qualifying income based upon the formula. Some income, it will not be considered qualifying income based upon the formula. This income and this income from the non-qualifying intellectual property, some portion of the income of the qualifying intellectual property, these two income will be straightforward subject to tax at 9%. It will not be considered for the de minimis. I think in the previous slide, I have mentioned that it will be considered for the de minimis criteria. Apologies for this. These two income will not be considered for the de minimis criteria. It will be straightforward subject to tax at 9%. So this activity, they have removed it from the intellectual property asset. They have removed it from the excluded activities, and they have given a specific formula how much portion of the qualifying income of the qualifying intellectual property will be considered qualifying income. Rest of the income and income from the non-qualifying intellectual property will be straightforward subject to tax at 9%, and it will not be considered for de minimis criteria. These are the qualifying activities. In the qualifying activities, they have added one more activity here. This is activity income from the trading of the qualifying commodities. If the qualifying free zone person is earning any income from the trading of the qualifying commodities, this income will be considered qualifying activity. And we know this, if the qualifying free zone person is doing any transaction with the non-free zone person, which are not excluded activities, but these are qualifying activities, it will be considered qualifying income. So income from the trading of the qualifying commodities will be considered qualifying income, even the qualifying free zone person having a transaction with the non-free zone person. So these are the major changes. Let me just repeat it. We'll go through the decision in detail as well. So first change is they have removed it from the one activity from the excluded activity, but they have added the same thing in a different way. Then they have added income from the qualifying activity from the qualifying commodities. It will be trading of the qualifying commodities. It will be considered qualifying activity. It can be qualifying income as well. Holding of shares and security, they have put limitation. Holding means holding the shares and security at least for a period of 12 months. This is another change. These are the four major changes. If we are going into the detail of these changes related to the decisions, So basically, Cabinet Decision 55 of 2023 and Cabinet Decision 139, ministerial decision. This Cabinet decision, this ministerial decision, it has been replaced 100 of 2023 has replaced 55 of 2023, and 265 ministerial decision of 2023 has replaced 139 of 2023. So Cabinet Decision 55 of 2023 and ministerial decision 139 of 2023 are no more applicable, but it has been replaced by the 100 of 2023 and 265 of 2023 ministerial decision. They have added some more definitions. They have given some more qualifying income criteria. So what are the definitions they have added? They said income derived from the qualifying free zone person from the ownership and exploitation of the qualifying intellectual property. This whatever we have discussed. If the qualifying free zone person is generating any income from the qualifying intellectual property, some portion of the income will be considered qualifying income based upon the formula that we will discuss. Rest of the income will be considered non-qualifying income. These are the definitions that they have added. Qualifying commodities, metals, minerals, energy, agriculture commodities that are being traded on the recognized stock exchange. This stock exchange can be in the UAE, it can be out of the UAE, but the important thing is these commodities that are being traded on the recognized stock exchange. If the qualifying free zone person is buying these commodities, selling these commodities on the recognized stock exchange, then it will be considered qualifying income. If the qualifying free zone person is buying any commodities, selling any qualifying commodity out of the recognized stock exchange, it will not be considered qualifying income. The recognized stock exchange definition they have given, this is a registered stock exchange in the UAE or out of the UAE based upon the specific equal standing specific criteria. Then they are qualifying intellectual property, basically patent, copyrighted software, any other property which has been registered, and this is not being used for business purposes like patent, like trademark, it will be considered qualifying intellectual property. Patent, they have defined patent granted under the respective patent, a registered patent will be considered patent. Copyrighted software means registered copyrighted software. Designated zone, they have given the same definition that they have given earlier also. These are designated zones as per the UAE VAT law. The zones, free zones, which are designated zone as per the UAE VAT law, it will be considered the same designated zone for corporate tax purposes as well. So these are the definitions that they have added. Now the qualifying activity, I have already just highlighted this. In the qualifying activities, they have added one more activity, trading of qualifying commodity. This is a major change in the qualifying activity. Rest everything is same. Basically, they have just rephrased the wording of, they have removed the wording conditions from here, they have put into the description. Else everything is same other than this major change. This major change is trading of the qualifying commodity. More of the holding of shares and security, as I discussed earlier also. They were investment purpose, and for investment purpose, they have put condition of 12 months minimum. They are holding it for a period of 12 months. Minimum they are holding for an interrupted period of 12 months. Rest everything is almost same. So these two changes are there: trading of the qualifying commodities and holding of shares and other securities for investment purposes, means holding shares or securities for at least for a period of uninterrupted period of 12 months. We'll discuss in detail trading of the qualifying commodity. These are the excluded activities. I have already requested you, out of the 6-7 excluded activities, they have removed this. Ownership or exploitation of intellectual property assets. Ownership or exploitation of the intellectual property asset they have already removed. But the same thing they have added in the qualifying income by classifying qualifying intellectual property, non-qualifying intellectual property. Some portion of the qualifying intellectual property will be considered qualifying income, rest will be considered non-qualifying income. This portion which will be considered qualifying income, it based upon the formula that we will discuss. So basically manufacturing, they have added the description. This description is not anything new, because if we're going to the public consultation paper that was issued in the past, almost the description what was given in the public consultation paper, they have taken the description from there, but they made it a part of the cabinet decision or respective ministerial decision, whatever is. So they have given the description of the manufacturing of goods and material, processing of goods and material, trading of qualifying commodities, holding of shares and securities. In the description, they have mentioned this line, whatever I'm asking, for investment purposes means when held for uninterrupted period of 12 months. If the qualifying free zone person is making investment in the shares or securities of any company, they are asking share and security of the juridical person, which is very important word. Juridical person means it can be in the UAE, it can be out of the UAE. They are not asking they should be made in the resident juridical person. They're not asking should be made in the company, which is the free zone company. No. Holding of share and securities anywhere across the globe in the juridical person. If someone is holding this for uninterrupted period of 12 months, it will be considered holding of share and security. It will be considered a qualifying activity. Then different ownership, management, operation of ships, there no change as such. This is the same that is given in the public consultation paper. Reinsurance services same, fund management services are same, wealth and investment management services are same, headquarters service same, treasury, financing aircraft, everything is same as per the public consultation paper. So I'm not going through in detail of all the description. Distribution of goods and material, there is a slight change in the wording, but the overall crux is same, whatever the understanding that we were carrying earlier. This is the same understanding. So basically, if someone is operating from the free zone, if someone is operating from the designated zone, by sitting in the designated zone, if the qualifying free zone person is buying or selling the goods out of the UAE, it will be considered qualifying income, subject to the condition goods are being distributed to the distributor, not to the end user. In the same way, if these goods are being imported within the UAE, now the revised cabinet decision says it should be imported through the designated zone. We had the same understanding earlier as well. So there is no change in the understanding. So crux will remain as it is. Qualifying free zone person should be based within the designated zone. And if they are buying and selling the goods out of the UAE, goods are being delivered to the distributor, it will be considered qualifying income. If they are importing the goods in the UAE, goods needs to be imported to the designated zone. It must be sold to the distributor. It will be considered qualifying income. Other than this, it will be considered non-qualifying income. Logistics services, no change. Banking activity, no change. Insurance, no change. Financing and leasing activity, as such, no change. So in the revised cabinet decisions, they have given the description of each activity as well, which can be a qualifying activity, which can be excluded activity. So they have given the description. This is a very positive thing that they have given the description. People will not be required to go back to the respective consultation paper, but they need to go through the respective cabinet decision to find the description to assess it will be considered qualifying income, non-qualifying income, excluded activities, and so on. Qualifying income, we all know this, that if the qualifying free zone person is selling any goods or services to other free zone person, it will be considered qualifying income. So in the previous definition, this is the first two criteria: income derived from transaction with other free zone person, income derived from transaction with a non-free zone person. From the qualifying activity that are not excluded activities, it will consider qualifying income. So there is no change here, no change here, no change here. So these two are same. One thing they have added, as I highlighted earlier as well, income from the ownership and exploitation of the intellectual property, qualifying intellectual property, it will be considered qualifying income. Rest, the definition of qualifying income is same. So they are asking income from the ownership and exploitation of the qualifying intellectual property. So we need to look into this, what is the qualifying intellectual property and how much portion of that income will be considered qualifying income. This is the formula they have given in the respective cabinet, respective decision. Their qualifying income of the qualifying intellectual property. We know this, what is qualifying intellectual property. We have already discussed the definition. Qualifying intellectual property means any patent, copyrighted software, or any other intellectual property which is registered within the free zone, within the UAE, out of the UAE. Other than that, that is being used for business purposes. They have specifically excluded the trademarks. So that basically intellectual property will be considered in very simple words. I can say registered intellectual property other than trademark, it will be considered qualifying intellectual property. So whatever the income the qualifying free zone person is earning from the qualifying intellectual property, they have given specific formula: qualifying expenditure plus uplift expenditure divided by overall expenditure. This fraction needs to be multiplied with the total income from the qualifying intellectual property. Whatever the income is coming from this fraction, by multiplying with the total income of the qualifying intellectual property, that will be considered qualifying income. At the same time, they have put restriction as well. They said whenever we are considering the uplift expenditure should be 30% of the qualifying expenditure, provided the qualifying expenditure means this 30% of the qualifying expenditure, 30% of the qualifying expenditure plus qualifying expenditure, it should not go more than the qualifying expenditure. When provided the qualifying expenditure being basically maximum, we can go up to qualifying expenditure. So this fraction needs to be multiplied with the total income from the intellectual property. That will be considered my qualifying income. Rest of the income, even from the qualifying intellectual property, will be considered by non-qualifying income. It will be straightforward, subject to tax at 9%. They're given the definition of qualifying expenditures: total expenditure, overall income, uplift expenditures. So qualifying expenditures related to research development, total expenditure, even including the acquisition cost, overall income, whatever the income is being earned from the qualifying intellectual property. Uplift expenditure, usually these expenditures are incurred for the intention of enhancing the improvement rules, quality and functionality. It is allowed up to 30% of the qualifying expenditure, provided that the qualifying expenditure are being lifted up to less than or equal to overall expenditures. So qualifying expenditure plus uplift expenditure, which should be maximum 30%, these both should not be more than overall expenditure. So divided by the overall expenditure. So this is the fraction that we based upon this, we can consider the qualifying income. Non-qualifying income, important thing. I think in the mention I've been in the very beginning of the lecture as well. So non-qualifying income from the intellectual property plus non-qualifying portion of the qualifying intellectual property, both will be subject to tax at 9%, and it will not be considered for de minimis criteria. Qualifying intellectual property in patent, copyrighted software, I think we already discussed the definition for this. Requirement of qualifying free zone person, de minimis criteria. Non-qualifying income, we know what is the non-qualifying income. Old provision, non-qualifying revenue in terms from the excluded activities, not qualifying activities. So they have added one more clause in the non-qualifying income as well: transaction with the free zone person, where the free zone person is not the beneficial recipient. By the way, this understanding is same. If the person is not the beneficial recipient, it will be considered non-qualifying income. Even the goods or services are being delivered within the UAE. Might be the one party, this is the free zone, this is the party A, this is the free zone person, supplier, qualifying free zone person. If the supplier is supplying any goods or services to A, and A is collecting on behalf of party C, which is out of the free zone, A is just collecting and passing on to the C. At the end, this qualifying free zone person is selling it to the C, right? Because A is buying or selling the goods on behalf of any other party which is out of the free zone. So principally, this is not a delivery by the qualifying free zone person within the free zone. The goods or services are not being consumed, and the recipient of the goods and services is not within the UAE, so it needs to be considered non-qualifying income. So there need no change, by the way, whatever the definition it was given in the previous law, previous decision, the same definition is being highlighted in the revised decision. As such, there is no change in the understanding. Qualifying income derived from the decision. Non-qualifying income basically in transaction free zone person is the commercial property. We know this, the one leg of the commercial property is the qualifying income. Rest of the all income from the commercial property is non-qualifying income. Transaction with the P, any income earned from the P is also non-qualifying income. Now they are asking income derived from the intellectual property, except for the qualifying income from the intellectual property, will be considered non-qualifying income. This thing I am highlighting again and again. So it will be intellectual property, qualifying intellectual property, QIP, non-qualifying intellectual property. This qualifying intellectual property, some portion will be qualifying income, some will be non-qualifying income. This portion will be calculated based upon the formula that we have discussed just now. It will be total income multiplied by the fraction. Fraction is basically qualified expenditure plus uplift expenditure divided by overall expenditures. So this fraction will be multiplied with the total income from the QIP. This total income from the QAP with the fraction will give me a qualifying income. Rest of the portion of that income will be considered non-qualifying income. This non-qualifying income and any income from the non-qualified intellectual property, both these income will be considered non-qualifying income. It will be subject to tax rate for 9%. It will not be considered in the de minimis criteria. The same thing they have produced it earlier here as well. Adequate substance we have already discussed. They have just rephrased it, everything, and included one important thing. And this important thing is, if the qualifying free zone person is earning any income from the qualifying intellectual property, the core income generating activities related to the qualifying intellectual property can be outsourced out of the free zone, even within the UAE, even out of the UAE. This is the one change in the maintaining adequate substance, because in the original decision they said very clearly the qualifying free zone person can outsource SIGA to the free zone person, but now they have given a relaxation that the qualifying free zone person can outsource SIGA, core income generating activities related to the qualifying intellectual property, in the UAE or out of the UAE. Rest everything is same. There's no change in it. This is thing they have the core income generating activities. The core income generating activities in respect of qualifying intellectual property can be outsourced to any other person in the state or to any other person out of the state, which is not a related party. This is important thing. I think I was not highlighting this. The person to whom you are outsourcing in the UAE or out of the UAE, out of the free zone, the person to whom you are outsourcing SIGA, core income generating activity of the qualifying intellectual property, that person should not be your related party. The rest everything is same. Supervision is same, like we discussed earlier as well. Earlier supervision was required. Right now the supervision is required as well. What is non-qualifying income? I think we discussed immovable property, permanent establishment. Now they have added the intellectual property as well. This is considered by non-qualifying income. Income attributable to the P. I think there's no change. We have discussed this earlier. Located in the transaction with the other free zone commercial property. The commercial property we discussed. Except one leg from the commercial property, every income earned from the commercial property will be considered non-qualifying income. Straightforward, subject to tax at 9%. One leg of the commercial property is qualifying income. That we discussed. There's a lot of conditions like qualifying free zone person and income, any income from the commercial property is within the free zone being used for business purposes, transaction is being made with the other free zone person, property is not being used for the accommodation or living purposes, then it will be considered qualifying income. Rest of the all income, all streams from the commercial property will be considered non-qualifying income. Straightforward, subject to tax at 9%. Immovable property, we have discussed this. There's no change in other conditions. There's no change basically. I'm just going through this very quickly. So summary of the overall changes. Some portion of the income generated from the qualifying intellectual property can be considered qualifying income. We have discussed some portion based upon the formula. We have discussed the formula. Trading of the qualifying commodity, we discussed, it will be considered qualifying income because it has been added in the qualifying activity. Holding of share and share, it has been redefined, and ceiling has been added, floor has been added minimum for a period of 12 months. Holding in share and securities of any juridical person, minimum for a period of 12 months, it will be considered for investment purposes. Less than 12 months, it will be considered non-qualifying income. So qualifying free zone person, if the qualifying free zone person is outsourcing SIGA of the qualifying intellectual property, it can be outsourced within the UAE, out of the UAE, but not to the related party. So this is all from my side. If you're in need of any support for the impact assessment, registration, implementation, advisory and compliance services, you can approach us. You can approach me. You can approach Faiza. You can approach any other team member. We are always there to listen, to understand, and we are ready to deliver and always deliver. And you can approach us at number 3391488 or info@crestcooper.com. This is all from our side. Thank you very much. And if you have any question, you are most welcome. Question, if you have any questions, you are most welcome. No more questions. Okay, thank you very much. I really appreciate your time and have a lovely evening. Thank you very much, Faiza. Thank you very much, everyone. Thank you.
Thank you, everyone.
Thank you. Thank you. Bye-bye.
Thanks for watching the video. Click on the bell and subscribe to the YouTube channel.